Hi there, it's Trisha, and I'm going to go over the trades for today, Monday, March 9th. I did not take any trades today. I did not see anything that fit my criteria and my trading plan, and I'll go over those here in a moment. We use two setups, one off a longer tick chart, one off a smaller tick chart, and we use three charts with indicators for confirmation before ever taking an entry. It is a very conservative way to trade the S&P Emini, and it keeps me out of trouble. That's why I like it. So you can go to www.easy-emini-trade and check those out. We have a setup occurring at 10:03:55, and we have divergence. We have price going sideways, indicator going higher, and we have our scalp indicator firing off here, right where this vertical line is. And if you look over here on our longer tick chart, I want to make that a little bigger. If you look over here on our longer tick chart, this is the bar that it is setting up on, right here where this arrow is, and this bar has not closed yet. Now, mind you, it's almost closed because I have my countdown on this bar. So we're very close to it being closed. However, we have the close from the previous day right above us. So for me to take that, there would not have been enough room. So that's why I would pass on that. Even though the bar was almost closed, you could have taken it. Just know that that area is right above your head, and you can see right here we did slice right through it, but that is not the norm. That is not usually what happens. You usually don't slice right through those reference points, but that is something that you'll have to decide how you want to take in your trading plan. And in mine, I need at least 5 or 6 points at least above or below me in order to take a trade. So that's why I pass on that trade. But you certainly could have taken it, and would have worked out, as you can see. So again, that's something that you'd have to decide for yourself, just being prepared that you could get a stall right in the area above your head there where we had the close from the previous day. Whoops. The next setup that occurred was at 10:21, and I would pass on this because it doesn't fit our criteria. It was not closed below both our moving averages on our longer tick chart, and that was right here. This is the bar right here that is setting up with this short trade that's setting up here. We have price going sideways, and as you can see, price comes down and bounces back up to previous resistance area, all while our indicator is going lower. This also bounced, but it did not bounce to its previous high, so that is divergence. So we have our scalp firing off here at 10:21, but because this is not closed below that moving average, I'm going to pass. Also, I would pass because we're not in a downtrend. Even if we close below this moving average on our longer tick chart, we are not in a downtrend. So that would be a questionable trade. If you're somebody who trades short off of resistance, then absolutely you can take that trade. But that is not how I trade. But you can adapt your rules to fit any way that you're comfortable trading. So I'm not saying that you have to do exactly what I do. You can take what I do and then add a couple different things that you like and make it your own. So nothing wrong with that if that's how you trade. So I'm just pointing out why I would not take it. The next trade that you could have taken, let's see where it's at here. This trade was setting up at just about 1 o'clock, and we have the indicator going down, price going slightly higher, short setting up right here, our first blue dot. This is in alignment. We have our trend indicator above 20, so everything's in alignment there. If you look here at our longer tick chart, let's see, where are we here? This is the bar that it's setting up on right here, and this bar is almost closed. And so if you have your tick counter or your countdown bar or your countdown indicator, whatever your platform calls it, you would know that this bar is almost closed. So we're below both moving averages, so we're okay there. Now, what held me out of this trade was that our ticks are getting extreme readings of minus 1200, at least on my tick chart. And usually on the tick, and that's the $ TICK, I'm going to stay out of a trade if I have extreme readings of like 900, 1000, 1100, 1200 plus or minus, because usually at that area you're going to get a pullback. So I opt usually to stay out of trades. Now that's totally up to you. You can certainly take that trade. It's totally up to you. That is just what I do. And of course that is a very simplistic way of interpreting the tick. But for me, I did not take that trade. If you did take it, you would have gotten approximately your +2 on a third, +375 on a third, and then been trail stopped out at 2 3/4. So it could have worked. And as long as you're aware that you do have the chance of a pullback because of the extreme readings, then by all means you can take that trade. I'm just pointing out why I would not take that trade. The next one that occurred was at, I think it was approximately 125 is the next time we had a setup occur, and this is exactly what I'm talking about. So we have this indicator firing off here for short, and we're not oversold yet, so we don't need divergence, so we actually could take that trade. However, and these are the bars here that it's setting up on, right here. On this setup here, we also have an extreme tick reading of minus 1200, and that one didn't work. So you can see why it might work one time and it might not work another. So that's up to you how you want to take that. That's totally up to you. You can certainly take that and just keep your stops tight and just be willing to accept the loss if it does go against you. Like I said, I personally will not take extreme readings of plus or minus 9, 1000, 1100, 1200. But again, that is totally up to you and what your trading style will allow you to do. So those are the trades that set up today, and I just want to point out why I did not take them, so that gives you a better understanding of what I'm looking at. And of course, that is totally up to you to either take them or not take them. Ultimately, the decision is yours. Also, we have our March contract that obviously is going to expire this month, and I had a question from somebody wanting to know how we would determine when to change over, and it's really pretty simple. Actually, you can have a chart open, you can use a 2-minute, 5-minute, whatever you want is fine, and put volume on both of them, one for the current contract and one for the new contract that's coming up. And when the volume on the new contract is greater than the volume on the contract that you're currently trading, then it's time to change it. And usually that will occur like in the middle of a day, like usually after lunch or something. And of course I'll point that out to you as well, but that's how we determine when to change contracts. So I hope that helps, and you can check those out at www.easyminitrade.com.